Hello and welcome to another daily recap. Today I'm going to recap August 1, 2024 and its EU. It's Thursday. So I didn't get any trades today. So let's see what is my analysis and why I didn't get any trade today. So before starting my precision analysis, I usually check the Forex factory news. And there were two newses. One is what at 1:30, one at 3. So both were at holder. So I expected, a big change during this 1:30 news because anything can happen during this news. So 2 minutes before, for you guys who are just starting off, you may be caught up in the wrong side of the market. So I advise not to take trades 5 minutes before or 5 minutes after the trade. I mean, after this news. So let's start with the daily. The daily is swing is bearish. I didn't take the full picture of the daily. Okay, I'll just show you in the chart. So this is EU and this is daily. So the swing is bullish. And let's jump here. So the swing is sorry, the swing is actually bearish. This is the strong swing high, weak swing low, and the internal is actually bullish. And price, took out some liquidity here and then made a chalk bearish, and this order flow is keep on continuing. So what I'm expecting is price to continue this order flow and take out this weak internal, I mean strong internal low, so that it can ultimately take out the weak daily swing low. So I'm expecting this order flow to continue. Currently, you can see the price as took this buy side liquidity, mitigated this supply, filled this imbalance. So there is a lot of chance that the price can come down to take out this low. So this would be my target. I mean, a drawn liquidity, you can see. Here you can see price mitigate the daily supply, thus it can push down to take out the weak low. This is supported by non-body close of the previous day's candle, or the price can continue moving higher to take out the buy side liquidity above. There is a buy side liquidity. You can see equal lows have been printed. So probably price can go further up, and this supply is unmitigated. So price can go further up, mitigate the supply, and then it can come down. Price rated the sell side liquidity is below. This one. Sell side liquidity is below the demand, and it also liquidated the lows of the previous candle. Thus, there is high chance that the price may want to go up today. This is actually yesterday's annotation. Go ahead and delete it. It's my fault. Only these two are there. So what I'm thinking is today the price will be bearish today. And this is 4-hour chart. The 4-hour is swing bullish. This is the strong swing, I mean weak swing high. This is strong swing low. And this is the internal range that I'm dealing with. This is strong internal high. This is weak internal low. And the thing to notice is price has reached the equilibrium of the swing range. So we can expect the price to go up and take out the weak swing high. So in 4-hour, which is in contrary with the daily bias, right? That's why daily and that's why I usually take into account of daily where I can get vital information. So here I can look for the continuation of this internal range because the daily bias is bearish. This is strong internal high, this is weak internal low. The price can come down to take out this weak internal low today. So this is the zoomed in version of the 4-hour chart. You can see the internal structure is actually bearish. This is a strong internal high. This is weak internal low. Price has swept this liquidity, filled this imbalance, tapped into this daily supply, and then chalk bearish. So there is a ton of chance that this weak internal low can be taken out. The only thing I need to do is jump into the medium time frames, look for confirmations, and then enter. That's it. Price filled the 4-hour imbalance, mitigated the daily supply, and made a bearish stop. All these factors indicate that the price has high possibility of coming down to take out the weak internal. So what about in the H1? H1, this is swing structure. Swing is bullish. So you can see both the daily as well as the 4-hour is suggesting that the price will come down. But in this, but if I take the swing is bullish, then I may not be able to take out the bearish trades and I'll be caught up in the wrong side of the market. Right. So what can I do? So it's not there is flexibility in H1 that we can adjust the swing rate, adjust the swing structure. So this small range doesn't seem to be a swing structure. So if I move this H1 swing high to here and I consider this as an internal structure and this bullish high boss has been made just to mitigate this demand, I mean, this supply. that will make more sense because this all becomes an internal structure, and then now price has reached equilibrium and then made a bearish chalk. So this will now this will be phase A longs, I mean phase A shorts. I'll just show you next. Yeah, H1 swing has been moved upside, and this is swing low. Neglect this one. So this is uh, uh, price came down, pushed up, again came down. So this is an internal structure and then pushed up. So there is an high boss up. So remove these two lines. This is a high boss up, and then price came down, made a bearish chop, again a bullish chop, and then a bearish chop. Now currently the order flow is bearish. Simple as that. And now we are going to target the weak swing low. So expecting the bearish order flow to continue, I'll look for phase A sales in this POI, having in mind that there is another POI above with Asian ICE inducements. So I don't think I definitely know that price will not go into this Asian eye because of this huge displacement. Once this kind of displacement happens, probably there will be a fair value gap form. So it will be very difficult for the price to overcome the fair value gap and also overcome this fair value gap to tap into this mitigate this supply and then come down. Rather, price will just mitigate this supply and then push down. So that's what I was expecting. So it's very high probability because I'm trading in line with the medium time frame order flow. There is high time frame support for me, and there is a valid POI for me. So everything was there. So this could be the high probability setup that I was looking for, but there is no trades. As expected, price just pushed down without giving me any entry. So this is the start of the Frankfurt, right? The start of the Frankfurt. Price pushed down, went up. Uh, this was my POI. So price didn't even bother to push up. Then it just rallied down. It just rallied down. There was no single, pullback into this supply for me to enter. So basically, I'm just a pullback trader. So if you uh, there is nothing called me from outer perspective. You can call me supply and demand, liquidity inducement trader. No, I'm just waiting for the pullback uh, and then trade. Additionally, I'll be looking for the price to meet some supply and demand, rate some liquidity, all those things. But basically, I'm a pullback trader. So if there is no pullback, there is no trade. That's it. So price took a swing low and made a bearish swing boss. There was no bullish chop, which could confirm that the price may start a swing pullback. Also, there is no high time frame demand from which I could expect the phase longs. There is no demand here. So I thought of once the price took a swing low, okay, let's play the swing pullback, and I expected some kind of high time frame demand from which the price could make a a bullish chop, and then I could look to take longs from here. But there is no demand and there is no chop. Tomorrow I can expect the price to come to the premium pricings, mitigate any one of the premium POIs, and then I could look for phase B shorts or phase A shorts as possible. So probably this POI would be, eliminated because it does not have any lead. So this would act as an inducement, I mean leg inducement for this POI. So this is a very high quality POI because it has swept liquidity. Uh, you know, it is found in the kill zones. It has pushed down, created imbalance, made an order flow shift, and did it. So it has done a lot than this POI. Probably I'm expecting the price to, take out this high, mitigate this POI, and then push down. I will not be entering directly. I'll be looking for medium time frame shift, and then I'll be entering the shorts. So this is from EU. So let's see what happened in GU. Yeah, let's see what happened in GU. So this is same day 70 in GU. So let's see. And there is no trades in GU too because EU and GU move almost similarly. Uh, Today also there is bearish bias in GU, but GU also didn't make any pullback. So let's see what happened in GU. So this is daily. The swing structure is bullish and the internal structure is also bullish. The fractal structure is bearish. So I was expecting the price to, price made a strong rejection of this demand. So maybe there could be a bullish chop or price could take out this low and make a failure reaction of it. So it is still in the consolidation. So swing is bullish, internal is bullish, fractal order flow is bearish. Price mitigated the daily demand, thus waiting for the price to shift bullish to target the weak internal high, or it can shift bearish to signal that the this sell side liquidity will be raided. So I didn't add that point. So actually, it is what I should have had in my mind. This is 4-hour chart. The swing is bullish. This is the weak swing low. I mean, sorry, strong swing low. This is weak swing high, and this could be the current internal range that I'm dealing with. So this the price is in the swing pullback range, and it has not yet reached the equilibrium of the swing range. So this is the internal structure that I'm dealing with. So we know that the price can take out this weak internal low because price has made a bearish chalk here, and this could be the POI. But the thing here is there is a ton of liquidity above, so price can also go up, sweep this liquidity, mitigate this POI, this pivot POI, and then it can push down. But with this huge displacement, I don't think price can go up. When I was analyzing this, it was almost 7:30, 30 minutes past Frankfurt open. So Frankfurt itself pushed the price, you know, much down. So there is nothing to do with once nothing to do other than waiting for the pullback in the London sessions. So price is consolidating after reacting off in the daily demand. This means that the orders inside the daily demand is getting filled, yeah, and there is high chance that the price may invalidate the daily demand. So whatever I told you in the daily, same. If the price takes out the weak internal low, I would look to follow the Forex bearish order flow since there is no significant demand to the low. So there is low resistance liquidity here. So once this weak low is taken, obviously these low resistance liquidity would also be taken. So price comes down, moves up, again comes down. So it can continue this internal order flow till it reaches some significant level of demand. So I'll be getting to this point. So, so what are these supply and demand zones? These supply and demand zones are the zones in which there is a lot of sell orders and a lot of buy orders respectively. So this is a 4 hours. I mean, this is a daily supply in which I mean, daily demand in which there are a lot of buy orders, pending buy orders. So price came down and filled some buy orders and pushed up. So once it has filled some buy orders, it can go up and take out and make a market structure shift. But it didn't do. What it instead does, it again came down, filled some it is filling some more orders, which means price wants to get through of this demand. The supply is in control. The price wants to get through of his command. Demand. Who, who can take these demand zones? The supply. The people who want to sell. They are looking to get rid of this demand. So they are pushing the price down, which means supply is in control. I'll be looking to play along the supply. The people who is in control, I'll be playing along with them. So that's what essentially the strategy is. This is H1 chart. So the swing is bearish and the internal is now bearish. Definitely, I'm not expecting the price to come and mitigate this POI and then push down. Definitely, it's not possible. If the price is going to come up, it will sweep all this liquidity, tap into this extreme 4-hour POI. Even after that, I'll be waiting for a medium time frame order flow shift to bearish, and then I'll be taking trades. This definitely take at least 2 days of time. So definitely, I know that there will be no trades today. But since there was no POIs left below, I was set in mind that I'm going to trade the phase A2 long, phase A2 shorts. So once the price reaches here, maybe one more leg here, and there could be some POIs, I could take some shorts there. So that was my game plan. But price just kept pushing down, and around around 230, price was like this. It made a V-shaped reaction, and it was just making the swing pull back. So possibly what I can expect tomorrow is price can mitigate this 4-hour demand, the 4-hour supply. Even if that mitigates the 4-hour supply, I'll be waiting for the price to make a medium time frame bearish order flow shift. Then I'll be looking to trade from the freshly formed POI. But even after that, I know that there is a risk in this trade because there is a ton of buy side liquidity, and above these buy side liquidities, there is this 4-hour refined supply. So there is if the price reaches here and then makes a medium time frame order flow shift, that is a very high probability setup without any risk factors. But if there is a bearish chalk here, then it's valid to take shorts, but there are some risk factors that will be running in my back of my mind. So that's all for GU. Let's see what happened in gold. The gold will be a bit interesting. So not like EU and GU. Hi, this is gold, and there is no trades in gold also, but the price action is very interesting. The price action almost gave me an entry, a valid profitable entry, but in the end, it didn't satisfy my liquidity criteria, so I didn't take the trades. So let's see what happened in the gold versus dollar chart. So this is a daily chart. The swing is bullish and the internal is also bullish, which means the price is in the phase A longs. But since the price has tapped into this daily supply, and this is too much elongated, I was expecting the price to come down to fill this imbalance and then push up, or possibly mitigate this area of demand, push down, mitigate this area of demand, and then push up. So that was my expectation. So essentially, my bias for the day is bearish. High possibility that the price can take out the daily swing high, which is weak, but currently I'm expecting the price to give a reaction of the daily supply before rallying up to take out the weak swing high. So this is the 4-hour chart. The swing is bullish and the internal is bearish. Sorry, the internal is also bullish. So this is a strong internal low and weak internal high is not yet formed. I need to wait for a bearish stop for that first. So there is this area of demand and there is small area of demand right here. So what I can expect is, I can't expect the price to come all the way down here and then make a move. Price can just come to this demand, this small demand, and then push up because the price can see the weak high in front of it. So just to gain some fuel, price can push down to fill some buy orders and then push up. So it is not necessary for the price to come all the way down to fill these kind of orders to push up. So it has the enough number of maybe it can have enough number of orders within this demand to push the price up. And yeah, this is the zoomed in version of the 4-hour chart. You can see the internal structure is just bullish. And this is the demand that I was talking about. I know this does not seem like a demand, but it's actually a demand because the price pushed down and pushed up. And it didn't sweep any liquidity, it did nothing, but still price can respect this and then push up. Otherwise, if this acts as an inducement, this would be a valid demand because this demand has swept liquidity and then pushed up. And it also has an inducement. So this could be a valid demand if the price uses this as an inducement. Expecting the price to give at least a small reaction of this daily supply and mitigate the 4-hour demand, during which I can play the shorts. Thing is, I'm not looking to play this longs. I'm looking to play the shorts, expecting the price to come down to this demand. If the price mitigates this demand, my risk to reward will be very low. If the price decides to mitigate this demand, my risk to reward will be a bit high. That's it. So jumping into the 1-hour chart, so the swing is bullish and this is the weak swing high, strong swing low, and the internal is now also bullish. This will be the weak internal low and strong internal high strong internal low, weak internal high is yet to be formed. But before that, there is this supply. Okay, within the 4-hour, within the daily supply, we are having this 4-hour supply. So price also mitigated that 4-hour supply, and within that 4-hour supply, we are having this H1 supply. So essentially, what is happening? Price came all the way up, mitigated this H1 supply, chalk bearish, and then it's now in the H1 POI. So which is a very very high probability of phase D shorts that I can look to play up to this 4-hour demand. And even this 4-hour demand may or may not hold because in H1 it's just a low resistance liquidity and price can just mitigate up to this demand and then it can push up. So very very high probability shorts that I can look to play today. Price mitigated the 4-hour daily plus 4-hour plus H1 supply and made a bearish chop. Thus, there's a strong chance that the price can come down to make an internal pullback. I love to play this internal pullback as the internal range is very large. So one more thing is that you can see the H1 internal range is very large, uh, where yesterday I actually created small internal structures also. So those kind of nonsense is not good for trading. So maybe tomorrow I'll change this as a swing structure, a swing boss. Then I'll change the entire thing. So this will become a swing boss, and then I can look to play the internal structure pullback. So I don't want the small internal structure to come into the play. So yeah, this is the M15 chart waiting for waiting for the entry. Price made a fake break, and yeah, this is the pullback. This is the point where the pullback has started. Run, pullback, run, pullback, run, pullback, run, chalk. And now I was waiting for this. Once there is, a bearish chalk, a ton of liquidity would be um, engineered above. So, and this is LC1, this is LC2. If the price takes this liquidity, I'll be placing my stop order itself there. But after they taking this liquidity, it will provide me an additional confidence because price can mitigate this area of imbalance and it can push down also. So I was waiting for the price to take out this liquidity to place stop orders. Price mitigate H1 supply and there is a fake break. If the price takes out the engineered liquidity, then I would take shorts from the LC. LC means liquidity candle. Ideally, I would also wait for the price to liquidate the M15 lid, LC2A plus LC1. This is the M15 lid, but I won't wait for that one because this is a very high probability setup. But definitely price is going to come down. There is not probability, this is possibility. So I just want to get into this trade. Yeah. Okay, actually I changed the swing structure. Okay, 750, I have changed the swing structure in H1, thus we are playing the PSC shorts essentially. So I told you, I'm going to make this as my swing boss. I'm going to make these as my swing structures. I did exactly that. This was this will become my swing boss, uh, bullish swing boss, and this would become the high time frame POI. Within this, we are having H1 POI, and these are my internal structures. So this will be my internal low. This would be my weak internal high, strong internal low. And price has made a bearish stop, tapping into the high time frame POI. So very high probability PhD shots. You can see here PhD with the following conditions. Price tapping in the high time frame POI, check. High time frame POI, the score of 4 by 8, checked. Empty of stock, checked. Everything is checked. So these are the criteria of the high time frame POI. Must accept liquidity as displacement as made out of flow shift. It's unmitigated. So these are the things that the high time frame POI has. So what are the risk factors? There is no lid for the H1 POI, thus price can go further up to grab the liquidity above the POI. Okay, yeah, price took this liquidity and then pushed down, but there is no inducement for it. That's why I was waiting for the pullback inducement. So if there is a pullback inducement, fine, that would be great. Also, there is Asian highs and previous high, which is above the POI. So one more risk factor is that there is Asian high there, and this is also the previous high. So ton of liquidity is there above the POI, but I don't care. As long as my pullback inducement is done, I'll be entering the trade because this is high probability setup. But unfortunately, price didn't, sweep this liquidity before pushing down. It just made one more leg down. So what I can do, I can just mark this POI and wait to look for this POI to be mitigated and then push down. But the caveat is there is a V-shaped reaction. Price, there is a V-shaped reaction plus price actually is coming off from this bullish fair value gap. This liquidated this liquidity below. This is actually a demand in the lower time frames, which the price just liquidated the demand, filled this fair value gap, and then it has made a V-shaped reaction. So the demand is in total control. I don't want to trade against the demand. So the demand is the one who is in control of the market right now at this moment. So price now mitigated the medium time frame POI, but I'm hesitant to take the trade for two reasons. Price is coming off after taking the sell side liquidity, coming off from bullish fair value gap. Thus the price has all the ability to go further up to take out the weak internal high. Maybe the swing pullback is done. I mean, maybe the internal pullback is done, and then one more leg up. It's possible. This would be my last area of demand, last area of supply. If this supply fails, then this would automatically fail because this would become a bullish chop. Then I could look to play the bullish order flow till the price takes out this weak internal high. The session update 1223 price has made a bullish chop. This is a good sign that the weak internal high can be taken out. I'll wait for the price to come to the demand and I'll look to take longs if there is LC2A or LC2B models only. Why? Because it does not have any lid. Price made a bullish chop. I'm waiting for this to come down. But it's around 230, just one more candle left. Probably the price will take out this weak internal high. That's it. So price made a bullish chop, which is a strong indication that the weak internal high could be taken out and the phase A2 continues. Tomorrow I'm looking forward to continue playing the A2 long along with this bullish internal order flow till there is bearish eyeballs, after which I will look to play the phase C shots. So essentially, I would be looking to play the A2 because this is a failed reaction of the 4R. So the price mitigated the 4R, came down. If this pushes up, this line would also be the fake reaction. I mean, fake reaction. I mean, not fake, failed reaction of this POI. So obviously, if that is the case, price can again pull down and take out the buy sell liquidity above this 4R POI. Since there is no high time frame supply, I'm not interested in playing BHC short. Yeah, for gold, the gold is actually in the all-time highs, so there is no higher time frame, I mean, higher time frame POIs to the left. So I can just look to play the A2 shorts till the price makes an bearish high box. And once it makes a bearish high box, then that would announce me that the phase C, that is the swing pullback, has started. Then I'll be looking to play the uh, swing pullback shorts, that is the phase C shorts. So yeah, there is no trades in gold also. Let's see. Maybe tomorrow I can get some opportunities. The thing is, day trading is not daily trading. Sometimes I get opportunities, some days opportunities may turn out to be losers, sometimes opportunities may turn out to be winners. It is what it is. Just let your edge play out. Over the time, it will compound. Like for example, if there is 10 trades and I lose 7 and I win 3, even then my net profit will be, you know, 0.5 R. I'm just in a net profit. Like many others who worry about the strategy and like even myself, I'm telling this to my old version, not I'm not blaming anyone else. My old version, like worrying about strategies, hopping strategies, and then like out of 10 trades, I lose 6 or 7, hop the strategy. Again, the next 10 trades do the same, and again there will be confusion, psychological problems, keep the account blowing. So that's not the thing that I'm gonna do now. Thing is, like I understood, I went through some emotional pain. It's fine. Like I just out of yeah, as I already told you, let it be 7 losses and 3 wins. I'll be plus 0.5 R in profit. That 0.5 R for the next 10 trades, there could be 6 losses and 4 wins. So it can improve over time because I'm gaining market experience. I'll be reviewing my trades. So the more I review, more I gain about the market experience, the more I perform well. I mean, not I won't perform well. The thing is, I would take, you know, I would avoid some of the trades which can end up in losses. For example, you can see today, I just eliminated the shorts idea because the price is coming off from the bearish value gap and took out the sell side liquidity. Previously, what I would do is I would be just sticking to this bearish bias and I would be taking trades. Actually, there was a valid setup here. There was a valid setup here, so I would have taken shorts and I would have gotten stopped out. So I just avoided one loss here. So it is what it is. Just keep improving. In future, definitely there would be a point where we'll be trading less of what is not necessary and more of what is necessary. So that's how a professional trader is developed. That's how my mentor developed. That's how I'm going to be developed. Thank you guys. That's all for today. See you in next day.